Stablecoins in Mzansi is our topic for this afternoon's panel. And I'm privileged to be joined by Hanres Beukes and Simon Dingle, guys that certainly know a lot about stablecoins. I'm going to actually just switch the script slightly, and I'm going to ask each of these gentlemen to introduce themselves. I don't want to be doing anyone an injustice, so we'll start off with you, Hanres. If you can just take a second and tell the audience who you are and what you're doing in the space.
Great. So my original background is from traditional finance, come from the hedge fund space, fund management, etc., and followed blockchain since 2011 onwards. And when smart contracts, when Ethereum launched and smart contracts came to the fore, is what caught my attention. And I realized what the future might look like from a finance perspective with regards to smart contracts, and how I saw the opportunity, how finance will evolve, especially being in TradFi, the shortfalls, what happened, especially after 2008. That was the main drivers for us, and around 2019, 2020. Made the decision to transition over and start developing our ecosystem.
Excellent. Thanks very much, Hanres. Yeah. Simon, over to you.
Thanks. Yeah, I've been in crypto for a while. Started some businesses, wrote some books, and now part of Zarb Stablecoin. Venox.io is our other business, and that's what I do when I'm not shit posting or buying meme coins.
And as you guys know, Simon Dingle really doesn't need much of an introduction in this industry. Hanres, over to you. I just want to ask the first question. Let me start off by asking the adoption of stablecoins in the industry. What have you seen specifically related to South Africa?
Firstly, before I get to SA specifically, if we can look at the continent of Africa as a whole, stablecoins has been at the forefront of adoption globally in terms of trading volume. If you look at it, the volume of stablecoins being traded in Africa is higher than Bitcoin, altcoins, and Ethereum combined, which says a lot. Africa has a problem with a shortage of USD. Cross-border remittances being very expensive, as well as traditional remittances being very expensive. Coming back to South Africa, I think the opportunity is there now as well, where we can start driving this adoption. Stablecoins is the ideal bridge between traditional finance and the blockchain that will introduce the underbanked and less educated people in blockchain to the blockchain and all other stable coins. And I see the future is bright with regards to that, but the most important factor is education and educating the country in how to do this, how it will work. Because most of the people sitting in the audience are educated crypto people, or, well, most of them. And we are targeting and looking at to actually make this work, we need to look at the 98%,
Absolutely.
Which is not involved.
Absolutely.
And what's important with that is to get people to start using stablecoins, B2B, P2P, B2P, and actually allowing people to pay with stablecoins at point of sale. Businesses because of lower costs and speed.
Absolutely. And the point that you mentioned there about the volume of stablecoin trading in South Africa, I don't know if a lot of people are aware of that, but it is astronomical. And that might point to the fact that, the true utility of crypto is being actually brought out more than people just investing in crypto coins and that type of thing, which is a very interesting metric to me. On Altcoin Trader, we've seen mass adoption of USDT. Very often, every day, that is our top traded pair, USDT and the South African Rand. Simon, I just wanted to let me ask you, can you tell us about the benefits of stable coins, specifically for South Africa, both in the long and the short terms?
Okay, so from my perspective, stablecoins get used for anything that money can be used for. but with all of the force multipliers of blockchain, right? So faster, fairer, more efficient. So take anything that you do, you know, traditionally trading or payments or saving or, you know, you name it, and add those force multipliers, better, faster, fairer. So you know, I like that you've differentiated between short and long term, because, you know, right now, stablecoins, especially emerging market stablecoins, are kind of an experiment. We have a hypothesis about how this plays out. And from our perspective, it's quite simple. We think blockchain's a proven technology, and there are many observations that go into that assertion. We think that everything gets tokenized in time. We don't think that fiat currencies are going anywhere anytime soon. Sorry to break it to the maxis, but I think we'll still have rands and dollars for a while. And so it's quite obvious to me that therefore you have to have a stable coin for every currency in the world, right? If we're tokenizing and we're re-railing our entire financial ecosystem, then fiat money has to be part of that. So, you know, right now, nobody's using emerging market stablecoins, let's be honest. We're part of the stablecoin standard, so we interface with a lot of other issuers around the world. I've just come from Singapore, where I was at Token 2049, but also at the Stablecoin Standards flagship event. So chatting to stablecoin issuers from Turkey, from Mexico, from Australia, you name it. And I think we're all pretty aligned on that outlook. Like right now, people are arbitraging using our stablecoins. There's some minor payments, you know, ecosystems that are being unlocked. Traders are using it as a store of value. But really, we're just beginning now. It's a long game. And so in the long term, the benefits are, you know, anything you can do with crypto, but pegged to a stable currency. So I think it's really, I see stable coins becoming part of everybody's everyday life without them even realizing it, but we're very far from there.
Very interesting. Thanks for that, Simon. There is a burning question that I want to get to, but I just want to quickly say, for a lot of people often say to me, but what's the value of the stable coin and how can I do anything with it if I don't want to sign up to X, Y, or Z exchange? And, you know, I always tell people there is huge value in any stable coin that has got pools in the DeFi space. So you can, in most cases, go onto any of the decentralized trading platforms and switch those stable coins, if you doubt their value and their authenticity, into coins that you might be more inclined to want to own, like Ethereum, or, you know, the list goes on. But there is true value. If you've got a stable coin and you can get onto a decentralized exchange, you can switch it out for a cryptocurrency that you might prefer. The burning question that I have, and I'd like to ask both of you gentlemen, I want to start with Simon, and this is also, once again, very specific to South Africa, specific to Mzansi. Do you see the South African rand as a stable coin taking any traction in the short or long term, or are we doomed to continue to trade with USDT and a dollar-based stablecoin, or has the rand got a chance?
We absolutely need a rand stablecoin. For one, you don't want dollar-denominated debt as a South African, right? So just think about it. If you're in an emerging market and you want to take out a collateralized loan position off of an asset like Ethereum or Bitcoin, right? You don't want that loan denominated in dollars. So you might now have to go to Aave or, you know, wherever, and compound and take out a loan in USDC or USDT. But you're going to at some point convert that into rand, and at some point you're going to have to repay it. And if it's denominated in the dollar, like, you know, we all know what's happening with the dollar, and the exchange rate, the rand's pretty strong right now. But generally you want to stay clear of dollar-denominated debt. So that's one very good reason why you would rather have your debt positions, you know, denominated in a local currency. So we absolutely need a rand stablecoin for that one singular purpose. You know, people who are eventually taking their salaries in stablecoin will want to denominate it to local currency. And I could carry on. I think to my previous point, anything you can use, anything you do with money, you can do with a stablecoin, just better, faster, more efficiently, fairer. So to me, it's quite obvious that we need stablecoins for every currency under the sun, including the rand. The rand is also idiosyncratic in several ways as a currency, and that's part of why we started the ZOP project. The rand is frequently one of the top 10 most traded currencies in the world. It has an interesting volatility profile that traders absolutely love. We've also got the weirdness of foreign exchange control. Don't get me started on that. But for better or for worse, it's here, and it makes the rand an interesting currency, and it presents some interesting opportunities for local issuers. So I think the future's bright for rand stablecoins, for every emerging market currency stablecoin. various reasons for it, but like I said before, it's very early days, so we're going to have to be in it for the long haul. I'm sorry, Oaks, we're not getting rich overnight in this way.
No, absolutely, Simon. I couldn't agree more. Efficiency in the decentralized space just takes out that extra layer of complexity where you've got more than a couple of currencies to deal with. So when you've got a rand-based decentralized experience or DeFi experience, it definitely, absolutely will make a big difference. Hanres, same question to you.
Yeah.
Are we doomed to go to the dollar route, or do you see fire?
Well, I agree with Simon. De-dollarization is something, especially in Africa, that's happening. If you look at Nigeria now, they're launching a Naira stablecoin as well. They're leading the race in Africa in terms of stablecoin adoption. South Africa is second. We're growing very fast. And we need that in terms of cost as well. It just makes sense, like Simon said. Sorry. But, and also from a regulatory space, South Africa, the SOBs, working with us in a sandbox environment. We're part of a group where we see how we can assist in regulating stablecoins in a sustainable fashion. Assisting people, making it possible for people to pay each other in stablecoins. Businesses, merchants accepting stablecoins as a payment mechanism. If you typically look at some of the competitors from a merchant perspective, where they have to wait 48 hours to clear their funds into their bank accounts, where with stablecoins it can be redeemed and instantly in their bank accounts at a fraction of the cost, comes back again to speed, cost, all of that.
Absolutely, Hannes. I mean, from a technical standpoint, stablecoins, the entire ecosystem is so efficient that if we were just given a chance, payment to merchants or payments to each other is a very, very simple technical bridge to cross, and we're basically there. So it's no longer about the technical aspect and can we do it, it's let's do it, it's easy to be done. Technically the whole thing's resolved. Regulation and adoption are two other areas that are up for consideration. Guys, I want to leave it there because I want to give the audience a chance to ask a couple of questions. I don't think we've got too much time, but maybe we can have 3 questions. James has abandoned us, yeah.
How's it, gents? So stablecoins are very exciting, but I see you each represent different stablecoins. What is the main difference between the two? Is it tech, liquidity, the underlying? What is the main difference?
I'm going to ask Simon to start off with that because
Look, I think fundamentally stablecoins are all trying to achieve the same thing. We have slight variation in how we do that. I can't speak for my compatriots in the industry. I can just tell you what we're doing. We think it's very important to sync up with global standards. So we spend a lot of time speaking to the guys at Tether and Circle. We know Jeremy from back in the day, and to me it's just important to move with the times. We kind of, if Tether and Circle are concentrated on EVM chains and Solana, for example, then we probably want to be there too. If Visa and MasterCard and Stripe have decided that they're going to take settlement using stablecoins on Solana and Ethereum, then why would you deploy on XRP? I mean, I don't know why you do anything with XRP, but anyway, that's another discussion. But so for us, it's very important to kind of keep pace with the industry and what everybody else is doing, because those network effects are fundamental. It's very important for us that we don't manage our own treasury, that we've outsourced that function to Old Mutual Wealth. We're very proud of that relationship, but we think that like Circle has outsourced their treasury management to BlackRock, you really want that kind of certainty and trust that you get from having the big boys manage the treasury. Adherence to standards. So like I said, we're a member of the Stablecoin Standard Authority. You have to be invited to the authority. So it's kind of their stamp of approval that we're following best practices in the industry. I think all of those things are important because at the end of the day, it's about trust. So why should you trust us? If we say we've got Rand in the bank, how do you know that? Where are our attestation reports? They don't have to be frequent. That's kind of a waste of resources, but they should be at least monthly. So that's one of the standards that we're expected to adhere to as part of the Stablecoin Standard Authority, et cetera, et cetera. So those are the things that are important to us. I don't know where you guys would vary. As I say, I can't speak for other people, but that's sort of where we're coming from.
Yeah, to answer your question from our side, you've got USDT, USDC, and I think that's good for the dollar as well. South Africa can do with more than one stable coin.
Yeah.
I think we can work together as well, whereas our business models aren't entirely the same. As an example, I know, Simon, you guys will focus on payments, etc. In the near future, at point of sale maybe, it will be beneficial if you look at it like a ZARC liquidity pool, which will make it easy for ZARP users to ramp off and on, making use of some of our rails, etc. I believe there's space for everyone. And also from a regulatory perspective, we're all in the same environment, working together, making the space work, as long as we can get enough people to adopt and start using the blockchain and see where the future is going.
Very nice question, by the way, to just get the different views. Look, from altcoin traders' point of view, we're just so excited to see people building in the crypto space. And quite honestly, I don't have a loyalty to any coin. I mean, if ZARP starts working really well, don't be surprised if you see it listed on our exchange. Just the fact that as South Africans identifying a need, and we want to go after that need, and we don't want to get to a situation where everyone uses USDT. Yeah. So from our point of view, obviously, I'm slightly biased to XR, and it's working well, but we are more committed to the industry, and changing and moving and staying fluid is not something that we would ever take off the table. And liquidity pools in decentralized exchanges is also a great idea. Competition is always healthy for the industry. So as long as we've got a lot of people building, we know that we're going to have world-class products. And that's our view on that.
Just one last thing, Richard. What I think is quite important, especially from a stablecoin perspective, is your reserve attestations.
Absolutely.
To gain trust from the community. And something that we've been doing, working closely with Moore, is actually showing that reserves updating on every minute or every 5 minutes, that they match 1-to-1. And at the end of the week, have an audit report released that's signed off. At least it's comfort for the investor that they know I can't do much with their money in a week's time. So where, Tether had a lot of issues like that in the past, only issuing reserve reports quarterly, which I don't think is very sustainable, but yeah.
That's a very interesting discussion, Tether, and how they maintain the number one position of stablecoins with their, and let's just all be honest, with their very bad attitudes to audits. So it's that is a whole other discussion. I don't think we've got time for. Is there anyone else that has a question? I think we've got time for one or two more. James, just let me know.
I think we'll go with one more.
Okay.
A previous panelist, I think it was Michael, right? Yes.
Hi, guys. So African currencies are a little bit different to the USD and the euro, in the sense that we have very, very high inflation. I think the Nigeria's experiencing 30% and Ghana's above like 20% in some of the years. So has there been any consideration to set up if I could call it a true stable coin, where the money that people get given, you invest it in, say, a government inflation-linked bond, and then you maintain that exchange rate to be, let's say, linked to a consumer price index, and that way you can make a coin that's probably a better store of value and a better medium of exchange, and just embedding in that inflation. Has there been any consideration in looking into something like that?
I'll just start off with that. Our view, the very nature of a stable coin is that it is pegged to a traditional fiat currency. So what you're describing, and I definitely don't think it's a bad idea, but is some way to preserve the negative effects that inflation would have on coins. And I think that is above our spec, specifically with XR. I'm not speaking for these gentlemen, but we really want to say this is the currency of the country and this is what it's valued at. We don't want to overstep our bounds and try and control the value, because essentially that could mutate into a different cryptocurrency, possibly a more valuable cryptocurrency, but it wouldn't by definition be a stable coin. I don't know if you've got any comments or if you agree to that.
I think this founder of Coinbase, 2 years or 3 years ago, started research on what they call a flat coin. And a flat coin is merely a token backed by a basket of goods to track inflation. But it's still a work in progress, so where that will go, but that's not a stable coin.
Yeah, I mean, currency baskets are nothing new. They've been tried, before crypto was even invented, and they never work out. And I think it's because, you're creating an abstraction in the pricing that's going to be pegged to something else. So it's going to be priced in dollars or whatever. There's going to be speculation on it. And so you might have built some fundamentals around CDI into it, or a list of other variables. But you're still going to get sort of perception into its pricing, or it's going to be weighted in dollars, and so it kind of starts tending towards the opposite of its stated intent. So it's an interesting thought experiment, and I think that it's not something that theoretically is impossible. It just hasn't been done before, and I'm not sure that crypto solves the problem either. So yes, I think it's possible. It's something that's fun to think about. It's a little bit like algorithmic stablecoins, right? It's kind of a holy grail. It's a great idea. We haven't seen one that works yet in practice. Time will tell. Maybe there's a way of doing it, but it doesn't seem to play out in reality the way that it does on paper. Would be my 2 cents on the matter.
Guys, I think let's leave it at that. We'll hand over back to James, and I hope you guys enjoyed that.
Thank you so much, Richard. Round of applause for our panelists here today. Thank you.